For financial summary, stay here. For full earnings call recording, skip to minute 2. SURAJEST financial results for September 2025 quarter with YOY comparison. Revenue 145 crore rupees versus 109 crore rupees YOY with a change of plus 33.03%. Expenses 80 crore rupees versus 46 crore rupees YOY with a change of plus 73.91%. Other income 1 crore rupees versus 1 crore rupees YOY with a change of plus 0.00%. Profit before tax 44 crore rupees versus 44 crore rupees YOY with a change of plus 0.00%. Net profit 33 crore rupees versus 32 crore rupees YOY with a change of plus 3.12%. EPS 6 rupees and 93 paise versus 7 rupees and 18 paise YOY with a change of minus 3.48%. Operating profit 65 crore rupees versus 63 crore rupees YOY with a change of plus 3.17%.
Ladies and gentlemen, good day and welcome to the Q2 and H1 FY2026 earnings conference call hosted by Suraj Estate Developers Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone telephone. I now hand the conference over to the Mr. Rahul Thomas, Whole-Time Director from Suraj Estate Developers Limited. Thank you and over to you, sir.
Thank you. Good afternoon, everyone. I welcome you all to our Q2 and H1 FY2026 earnings conference call. Along with me, I have our CFO, Mr. Shripal Shah, Mr. Ashish Samara, Internal IR, and SGA, our Investor Relations Advisors. I hope all of you have gone through our investor presentation uploaded on the stock exchange and our company website. The Mumbai real estate market continues to present significant growth opportunities, particularly in the redevelopment segment. Within this, South and Central Mumbai remain the most attractive micro markets, characterized by strong end-user demands, premium pricing, and limited supply. Despite the inherent challenges of fragmented ownership and legacy tenancies, these markets continue to see steady traction as demand for high-quality residential products remains robust. This environment creates a favorable backdrop for well-located luxury and value luxury projects where established developers with a credible brand and strong execution track record are best positioned to capture growth. For us at Suraj Estate, our deep presence, brand recall, and execution capability in South and Central Mumbai allows us to leverage this opportunity effectively. Our focus on value luxury and luxury residential developments enables us to capture premium realizations while maintaining strong sales momentum even in a competitive market. We are pleased to report a strong quarter supported by solid operational performance and the successful launch of two key residential projects, Suraj Oreva at Prabhadevi and Suraj Parkview 1 at Dadar West. These launches have been instrumental in driving pre-sales traction and reinforcing our leadership in South Central Mumbai market. Suraj Oreva, located in Prabhadevi micro market, is a 21-story tower under the value luxury segment, offering 1, 2, and 3 BHK homes ranging from 450 to 800 RERA carpet area, with prices starting from 2.47 CR. The project, with a saleable area of 0.24 lakh square feet with an estimated GDV of 120 crores, witnessed a 39% sales at launch, reflecting very strong buyer confidence. Suraj Parkview, located Shivaji Park, Dadar, is an upscale value luxury tower offering a blend of heritage, charm, sea-facing views, and modern design. With a saleable area of 0.53 lakh square feet and an estimated GDV of 250 crores, the project achieved 42% sales during launch, driven by strong demand and its excellent connectivity to the other metro, BKC, the Coastal Road, and Bandra-Worli link. Beyond these launches, Suraj Estate continues to maintain a robust pipeline of approximately 13.6 lakh square feet across 17 projects concentrated in South and Central Mumbai. These include a healthy mix of residential and commercial developments spanning the luxury and value luxury segment. On the residential front, our portfolio comprises of marquee projects such as Lumiere in Dadar, Bandra 1, 2, 3 projects, Marinagar Phase 2 and 3 in Mahim, while our commercial segment includes Suraj One Business Bay and the Marinagar Commercial at Mahim West. Our ongoing projects continue to perform well with a total sold area of 4.89 lakh square feet and an average realization of 45,409 per square foot. We have achieved cumulative collections of 1,363 crores with a balance receivable of 881 crores with an estimated GDV of 285 from our unsold inventory, translating into a combined visibility of approximately 1,166 crores as on September 25. This strong visibility of cash flow reflects our solid financial footing and underpins growth momentum for the coming quarters. During the quarter, we have also completed an acquisition of a prime 644 square meter land parcel at Lower Parel for 6.44 crore, including stamp duty and registration charges. This parcel will be merged with an adjacent existing project called Ambaba Bhavan and RK Mansion, creating a combined land area of 1,310 square meters with a saleable area of 32.32 lakh square feet with an estimated GDV of 130 crores. The project will be developed under Regulation 33(7) of the DCPR and will comprise of premium 1 and 2 BHK apartments with optimized layouts, wider frontage, and enhanced parking facilities. Strategically located in Lower Parel, the project enjoys excellent connectivity to the Western and Central Railway lines, monorail, and Coastal Road, as well as proximity to key commercial, retail, and lifestyle hubs. This acquisition enhances our footprint in high-value South Central Corridor and aligns with our strategy of deepening our presence in the premium redevelopment markets. Our marquee Mahim commercial project also continues to progress well. Planned on a combined land parcel of approximately 3,000 square meters, the development will offer a saleable area of 2.09 lakh square feet with an estimated GDV of 1,200 crores. Most regulatory approvals have been secured, and the RERA registration is expected by the end of November the following month. Once launched, this project will serve as a key growth driver for Suraj Estate, expanding our commercial portfolio and strengthening our presence in the Mahim sub-market. Together, these launches, acquisitions, and ongoing developments reinforce our presence in South and Central Mumbai, positioning us to capture the sustained demand for high-quality housing and commercial assets in one of India's most premium real estate markets. With this, I would like to hand over a call to our CFO, Shripal Shah, who will run you through the financial highlights.
Thank you, Rahul. I will run you through the financial highlights for the quarter and half year ended September 2025. For H1 FY 2026, total income grew 14% year-on-year to 278.6 crores compared to rupees 244.3 crore in H1 FY 2020. EBITDA stood at rupees 115.9 crores in H1 FY 2026 versus rupees 120.2 crores in H1 FY 2025, and PAT stood at rupees 54.4 crores for the half year ended September 2026. On a quarterly basis, total income grew 32.6% year-on-year to rupees 145.4 crores in Q2 FY2026 from rupees 109.6 crores in Q2 FY2025. EBITDA increased to rupees 65.6 crores versus rupees 64 crores in Q2 FY2025. and PAT is 33.1 crore in Q2 FY2026 from rupees 31.8 crores in Q2 FY2025, supported by operating leverage during the quarter. Operationally, pre-sales grew by 88.8% quarter-on-quarter and 42.4% year-on-year to 152.9 crores in Q2 FY2026. H1 FY2026 pre-sales stood at rupees 233.9 crores with realizations at rupees 43,850 per square feet in Q2 and rupees 45,515 per square feet in H1 FY2026, remaining moderate due to the higher share of value luxury segment during this quarter. Collections stood at rupees 71.2 crores in Q2 FY2026 and rupees 185.9 crores in H1 FY2026, primarily reflecting lower cash flows from new bookings concluded at the end of the quarter. As on September 2025, the company's gross debt stood at rupees 545.8 crores compared to rupees 456.3 crores as of March 2025, while the net debt increased to rupees 497.6 crores from rupees 414.2 crores over the same period. The increase in debt level was primarily driven by expenses including construction approval and pre-construction costs for two of our projects called Parkview 1 and Suraj Estate. Additionally, we also drawn down further debt for approval-related payments for our upcoming commercial project at Mahim, which has contributed marginally to the rise in the gross debt. Overall, the increase reflects the company's continued investment in growth and project pipeline expansion. With this, I would like to open the floor for questions. Thank you.
Thank you, sir. Ladies and gentlemen, we'll now begin with the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use headset while asking a question. Ladies and gentlemen, we'll wait for a moment while the question queue assembles. The first question is from the line of Sukriti D. Patil from Eyesight Fintrade Private Limited. Please go ahead, ma'am.
Actually, I am Mr., not ma'am. Good afternoon to the team. I have two specific questions. First, I would like to ask Mr. Shah, looking ahead, what internal practices or financial levers do you see most important for maintaining discipline across varying project timelines and market cycles? Yes, thank you.
So primarily, we are going to invest in upcoming portfolio of projects, and we ensure financial closure by availing debt and also maintain healthy collections to fuel the growth of the projects to enable us to complete the projects in a timely manner. And also, without saying that, we also would like to maintain a very healthy debt to equity ratio while we are expanding our projects.
Okay, and my final question is to Mr. Thomas. With regards to one of your properties, Ocean Star, I believe a lot of other projects which were ongoing in the area have been completed, but this particular project is still under construction or it's taking a lot of time. So can you, sir, please highlight why it's taking so much and what are the delays accounting for?
So in terms of delays, I think we have to understand that we are well within the RERA date. The RERA date for the Ocean Star project is June 2026. So we're confident that we will be handing over that project within the RERA date. Thank you.
Okay, thank you.
Ladies and gentlemen, anyone who wishes to ask a question may press star and 1 on your touchtone telephone. Our next question is from the line of Himanshu Dugal from Stylus Holdings. Please go ahead. Mr. Himanshu Dugal, you may proceed with your question. Thank you. Since there is no response from Himanshu, we'll move forward to the next. Mr. Raghavendra Singh, please go ahead with the question.
Good afternoon. I had three sub-questions on Bandra projects. I mean, in the investor presentation, we can see there are three projects there. So what might be the GDV for the three projects combined? What is the timeline for launch? And financing-wise, do we depend on the cash flows from our commercial project launch to finance that, or will we also go for a preferential share issue as there is a motion for that?
Hi, thanks for the question. So if we look at the investor presentation, the total square footage which we have for sale is approximately 2.76 lakh square feet. So the area, the broad range of pricing in Mount Mary ranges from between 1 lakh to 1 lakh 50. If you take a 1 lakh potential, also it comes to about 2,760 crores. So roughly you can take a price line of 3,000 crores as a top line. In terms of the funding requirements, we are ideally wanting to use our internal accruals for now, but there could be a possibility that we will be raising some funds to at least kickstart the initial level of the project.
Thank you.
Thank you.
Thank you, sir. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and one on your touchtone telephone. Thank you. Our next question is from the line of Maitrisha from Sapphire Capital. Please go ahead.
Yeah, hello, am I audible?
Yes, ma'am, you are.
Hello. Yeah, firstly, congratulations on the two launches. Since we are planning to launch close to 2,000 crores of GDP in FY26, what sort of sales targets do we have for the first half of the year?
So we're targeting, touch would be, we've seen good velocity in our new launches, and we're quite confident that since we're in a commercial bull run as well, we see that we're going to get good traction once we launch our commercial, which is due in November. So I strongly believe that we'll be able to at least reach a pre-sales of 600 crores for this year.
That is great. And any sort of guidance could you give for the revenue and margins for the next 2 years, the FY26 and FY27?
Margins, which we have, I mean, if you see broadly ranging between 30 to 35%, so I think you can take that as an average.
And any pre-sales guidance or the launch guidance for FY27?
Sorry, can you repeat that again?
The launch guidance for FY27, do we have any number on that?
I think it's too early to let us focus on getting the launches in place, and I think this year is very critical because we have a lot of launches. We may come back to you on the next year, but I think this year is what we're focusing on.
Okay. And did you mention the revenue guidance for FY26?
No, revenue guidance, we are following the percentage completion method. So it's difficult to tell you an exact figure right now, but I think pre-sales is what everyone understands very easily.
That is it from my side. Thanks and all the best.
Thank you. Ladies and gentlemen, who wishes to ask a question may press star and one on your touchtone telephone. Thank you. Our next question is from the line of Bhavin Modi from Anand Rathi Wealth Management. Please go ahead.
Hi, sir. Thank you for the opportunity. Sir, can you just repeat about the pre-sales, guidance for this year? What is the guidance?
Hi, Bhavin. So the guidance which we expect, including the commercial, is 600 crores.
And sir, second thing, would just like to know what is the expenditure towards the approval cost for this quarter for the commercial project in Mahi? What is the amount we have spent for the approvals?
Close to 20 to 25 crores we have spent in the project.
Okay. And for the Bandra project, did we spend anything on the approval?
No, nothing on the approval part.
Yeah, that's it from my side.
Thank you.
Thank you. Our next question is from the line of Tushar Sarda from Athena Investment. Please go ahead, sir.
Yeah, thank you. Again, my question was on, you have some 13-14 lakh square feet, which you say estimated available for sale. So while the commercial you are launching this year, what is the timeline for other projects?
So, Tusharji, as I said, the larger project, which is the commercial, is as I said, in November is what we're expecting the RERA. So that's when we can officially launch it. Having said that, Mount Mary is something which we are again focusing on as a group. It is again, you require a lot of capital to be infused because the size being what it is, you require a lot of capital upfront. So we can give you an exact timeline, maybe a bit later in the, maybe after 1 quarter on the Bandra land parcel, because we're just tying up some loose ends there. But the commercial is something which we're very confident that we'll be launching in November.
Yes, so apart from these two, there are 8-10 other projects which are also smaller. So any timelines on that? Because you seem to have now run out of inventory to sell. Almost 90% is sold.
Correct. So just give you a timeline on the launch pipeline for this year. So we have the commercial, which is about 1,210 crores. We have another project called Goodacre House, which is FP 280 that has a 150 crore top line. That's also expected in H2 of FY26. We have a third project which we discussed in Lower Parel called Ambawat Bhavan. Again, that is planned for launch in H2. We have a project in Maheen called Lobo Villa, which has a top line of 180 crores, which is again planned for launch in H2. And a small project, the top line of 80 crores in Shivaji Park, which is again planned for H2. So we have technically 5 new launches coming up, including the commercial, planned for H2.
Well, that's good to know because it's not mentioned in the presentation, so I was wondering what the plan is. Okay, commercial, how are you going to finance? It's going to be sale model or are you going to lease it? What is the plan?
So it's a sale model.
Sale model. Okay. Okay, thanks.
Thank you.
Thank you, sir. Ladies and gentlemen, just a reminder, anyone who wishes to ask a question may press star and 1 on your touchtone telephone. Our next question is from the line of Himanshu Dugal from Stylus Holdings. Please go ahead, sir.
Hi, is my voice audible?
Yes.
Yes, sir.
Hello. Yeah, so I just have one couple of questions. That a new project is going to launch in November, so there is any expected date for the launch?
Expected date, as I said, the RERA is expected in November. See, we cannot give an exact date because it's finally we need a RERA certificate, and that itself is a process. So can't give you an exact date, but you can take it within November month. We are confident that to get the RERA certificate.
And there is any regulatory delay in any kind of a projects, like upcoming projects, do you see?
No, not any regulatory delays. As I said, there will be certain 5 projects which have to be launched in H2, require certain IOD and CC. So that is a work in progress as we speak. And we're confident that we'll get the launch pipeline what we have committed.
Okay, thank you. That's from my end.
Thank you. Ladies and gentlemen, who wishes to ask a question may press star and 1 on your touchtone telephone. Thank you. Our next question is from the line of Tanya Desai from DS Securities. Please go ahead, ma'am.
Good afternoon, sir. Thank you for the opportunity. I had a couple of questions. My first question was that have you seen any kind of change in the buyer behavior, let's say like payment timelines or preference this quarter compared to the previous year?
Not that which is very alarming. We see it to be the same as before. Only shift we are seeing is the value luxury, which we have launched, we've seen good response. So I think the ticket size is also very relevant for the masses. And I think that's a good spot to be in, where we kind of cater to the larger audience.
Okay, sure, sir. So my second question was that are there any significant cost overruns or any kind of project delays in any of the key projects that investors should be aware of?
So as the earlier gentleman has said, that most of we have hardly any unsold inventory and any from the ongoing sites. So the new projects are very important to get launched. So that's why we're very confident that once the commercial comes in, we have enough inventory to sell. We've got good response in our two new projects which we've launched recently. So I think we're excited that, about this commercial launch, which is expected in November.
Sure, sir. Thank you.
Ladies and gentlemen, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Tushar Sarda from Athena Investment. Please go ahead.
Yeah, thank you for the opportunity again. On commercial, what is the kind of investment that you will need to make? Because even if you do sale model, payment will come linked to construction, right? So, and it also takes time to sell. So how much investment would you need, and how are you planning to finance that?
So with regards to the investment, we will need some approval-related further payments this particular quarter. Post which, once sales are done, so we will be good with the cash flows. As soon as, generally we collect 20% on our launch, and then, further, as milestone in construction plan we provide. So that will have sufficient financial closure is also there in terms of we already have sanctioned limit of 250 crore for the said project. So I think initial investment may be to the extent of 15 to 20 crore, which will be required. And post that, we see good collections coming in once sales kick in.
So you won't need to take any construction-related debt in this project?
Construction will be required only when there is a gap. So depending upon the sales which we achieve, on a required basis, we will take to fill the gap in construction. But again, that will be supplemented by cash flows from the project, and as and when the sales happen.
No, that I understand. I'm just saying, any plan for peak debt for this project? What do you think is the funding that you need to put in and therefore borrow that much money?
So maybe another 50 to 100 crore may be required for this project.
Okay. And for the Bandra project?
At the plinth level, so post plinth level, we will not require that much of collection debt to fund the construction.
Okay. And for Bandra project, since it's a very large project, I don't know you're planning to launch it in phases or one go, but the approval cost will be substantial. So will you be getting a partner there, or you're planning to do it on your own 100%?
No, so we won't be taking any partner there. We definitely want to do it ourselves, this thing. But as we said, the investment is large. So we are just focusing on our ongoing sites and on the sales so that we can have enough cash flows internally to kind of kickstart that project.
So one can expect Bandra to be done only after a year or 2 years once this commercial is done. Is that the plan?
Yeah, I would say at least 1 year. I think by the time we get approvals, because it's a larger layout which we have planned, maybe 1 year is a good timeline. And we've seen good buoyancy in the commercial, so we're quite confident that we'll be getting some good sales in the commercial as well.
Okay. So you're not looking at any private equity kind of participation there?
Not as of now.
Okay. Thank you.
Thank you, ladies and gentlemen. Just a reminder, anyone who wishes to ask a question may press star and one on their touchtone telephone. Our next question is from the line of Rajendra Pasif, an individual investor. Please go ahead.
Thanks for the opportunity.
my question to Mr. Thomas is like, we had the discussion around May after the Q4 results regarding the fundraising, and at that point in time you mentioned like there were no plans during that time. So what changed in these 4 months that we are looking to have another fundraise of around 500 crore? So if you can point something around that.
Can you repeat that? Sorry, I didn't follow the question.
Sure. So my question is like, Mr. Thomas, we had the discussion after the Q4 results in May, where I asked you like, are there any plans to go for any other further fundraise basically? And at that point in time, you mentioned that there are no plans as of now. So my question is like, what changed in the 4 months that we are looking to have another fundraise? Like, are we doing it for business development or is it mainly to reduce our debt and complete the current only project?
Yes. So the provision which we have made is an enabling provision, so that we could get an approval of the shareholders. Having said that, we are not saying that we are not going to raise any funds. We may raise, like if we have launched our Bandra project, where it requires a lot of capital upfront, we would require a fundraise right now if we have to bring that project into light immediately in the next 6 to 8 months. So that investment is required. So there would be, of course, if we are looking at it strategically, if we do a fundraise, whether we can kickstart Bandra in a faster pace. So that is why there was a decision to take an enabling provision, and subject to market conditions, we will decide whether we can go for a fundraise or not.
Okay. So it's not like 100% sure as of now, like it is still in the pipeline.
Yes, there's a possibility, depending on market conditions, that we may go ahead with the fundraise.
Okay. And will the complete fundraise be for that Bandra project, or are we looking for some other PPA along with that?
Okay. So there are two big sites of ours primarily which we are focusing on. One is in Mahi and one is for Bandra. So primarily it will be used mainly to kickstart both these projects.
Okay. That was also my.
Thank you. Anyone who wishes to ask a question may press star and one on your touchtone telephone. Our next question is from the line of Rahul Jain from Agarwal Securities. Please go ahead, sir.
Thank you, sir. Thank you for the opportunity. Just a couple of questions from my side. First of all, I would like to understand what is our target mix between the luxury and mid-segment housing going forward? And also, how do you see the demand shaping up in the Mumbai micro market in which we operate?
So, Mr. Rao, we are focusing entirely all our new inventory and our new launches in the value luxury concept, because that's what we are seeing traction, and I feel that's the way forward, at least as part of our strategy. Having said that, commercial again is, like I mentioned earlier, we'll be going for a sale model, not a lease model. And Touchwood commercial is doing well. However, for Bandra, when we start Bandra, that will be in the luxury segment, because the per square foot rate in Bandra starts with a lakh. So doing value luxury does not make sense there. So that would be the only project which would be in the luxury segment. But predominantly all the new launches will be in the value luxury.
Okay, sir. Thank you. That's helpful. My second question is, we are facing rising costs and tight contractor market. How are we planning to secure the vendor contracts, and do we have any cost escalation clause in our contract, or are we absorbing the same?
Can you repeat that? Sorry, I didn't follow that. Can you repeat that again?
Yeah. So my question is that with the rising costs and tight contractor market, how are we planning to secure the vendor contracts? And are we passing on the same through cost escalation clause, or are we securing the cost escalation?
So whenever we give contracts, they have a basic rates mentioned in the contract. So we give with material, because that's what the larger contractors do. But having said that, the basic rates, even the contractors, if there is inflation rate in steel or concrete for that matter, there's always basic rates mentioned in the contract. So that would obviously come at some, depending on how much it rises, some part will have to be borne by us, but there's a range mentioned in the contract. So we kind of mention at least the current market prices with a little bit of inflation in our contract to make sure that we don't overshoot our contract value.
That's helpful, sir. That's helpful. Thank you so much, sir. I will join it.
Thank you.
Thank you. Anyone who wishes to ask a question may press star and one on your touchtone telephone. Our next question is from the line of Anand Muntra from My Temple Capital. Please go ahead.
Thank you for the opportunity. So, sir, after a launch, how long does it take for the project to start contributing to revenue?
Generally, a quarter it takes.
So, a quarter lag. So, maybe if you launch the Mahim project, the commercial project in November, it should start contributing to revenue from the March quarter itself.
It also depends on the size of the project. If the project is a very high, the size is very big, then it may take two quarters also.
Got it, sir. And whatever launch projects we have now, currently, what would their approximate cost to complete be for the projects that are already launched, ongoing projects?
So it will be close to 650 odd crores for these ongoing projects.
Against which we have sold plus unsold receivables of what? 1100 or 1200 crores.
766, yeah.
How much is the number, sir?
Sorry?
The number is how much? The sold plus unsold receivables?
1166 crores.
Okay. Got it. Thank you. That was it from my end.
Thank you. Ladies and gentlemen, just a gentle reminder, if you wish to ask a question, you may press star and one on your touchtone telephone. Our next question is from the line of Ishita Lodha from SCAN Investment. Please go ahead.
Hi, sir. Thank you for the opportunity. What is the value of the unsold inventory from ready-to-move-in projects?
So there is no unsold inventory in ready-to-move-in project. All is sold out.
Okay. And can you please highlight what is the funding requirement for the Mahim and Bandra project before launching it?
Which Mahim project you are saying?
Mahim commercial project and Bandra project, the two large projects. What is the funding requirement before launching it?
So as we see today, at least we will require 15 to 20 crores in the approval part because we have in the advance stage of obtaining CC, and post which the initial mobilization advance will be required. So close to 25 to 30 crores in approval and other expenditures, pre-construction expenditures.
Okay. And so this quarter the collections was a bit subpar because it was sold towards the end of the quarter, but how do you see it going forward?
So we are seeing very good traction in collections. This quarter considering we have done very good sales, it will follow. It's only a quarterly change because one quarter or it is a spillover effect. So we are confident we will have a very good collection this quarter.
Okay. Then we saw a very good response in the two launch projects this quarter. So now how do you plan the sales for the balance inventory left in these two projects? Like if there is demand, will you sell it now or wait for the realization to grow and sell it later?
So we will not hold the inventory as such. Because we want to do more pre-sales and we also want to launch the new sites. So we don't intend to hold, obviously subject to some pricing as per expectation of our management. Otherwise we are not holding any inventory.
Okay. Okay. Yeah. Thank you. That's it from my side, and all the best.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on your touchtone telephone. Our next question is from the line of Raghavendra Singh, an individual investor. Please go ahead, sir.
Hello. Yeah, this is on Bandra project. You mentioned it may launch after 1 year. So is it still premature to give the guidance on the margins of that project if potentially you're saying top line of 2,500 or 3,000 crores on the three projects combined?
It's a bit early to get into the discussion.
Okay. And will the cash flow from the commercial project help guide your decision on the fundraise for launching the Bandra, or fundraise is definitely required for?
So I think it depends on the quantum. Of course, fundraise will be required, but the quantum will determine depending on the commercial sale.
And Mahim, if I look at comparables, there's not much commercial property up for scale. So is it a good market for commercial office space? I mean, the people who are living in that area or close by?
So we're seeing the connectivity through that area is going through a sea change. There's a direct corridor coming which is connecting BKC, Western Express Highway to Senapati Buffer, where our particular project is located. So we're going to have a very good connectivity seamlessly to the coastal road, and also the connectivity to the running aqua line, metro, and the railway. So I think we're very confident, and we're seeing good demand for such offices.
Okay, thank you. That's all from my side.
Thank you.
Thank you. Ladies and gentlemen, anyone who wishes to ask a question may press star and one on your touchtone telephone. As there are no further questions from the participant, I now hand the conference over to the management for the closing comments. Thank you, and over to you.
We thank you everyone for participating in our conference call, and we thank you, and we're happy to answer any questions. You can reach out to our investor relation advisors for any further details. Thank you very much.
Thank you, sir. On behalf of Suraj Estate Developers Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.